people want to invest in things, like I said, that aligns with their core values. So once you begin to educate them about what you do, eventually they'll be attracted to that. And when they understand the investment from the education.
Welcome to Unstoppable Podcast with Harry Sardinas, inspiring conversations with influential millionaires, investors, thought leaders, entrepreneurs who are making a massive difference with their innovative products and services, and sharing the challenges and wisdom of how they sold their first million.
Right? So whether you working with the group of investors, you have to put a proposal that of course have to offer to the investor a decent return, but it had to make sense. Um, uh, that's why other people go out on there and lose money. Oh, Harry, I lost million, I lost 2 million. I said, well, no, look, I invest in this property project. Look, they're gonna give me this return. I said, but do you think, do you study this properly? Do you use this? This is a crazy return. It's not actually possible. So, in terms of due diligence or in terms of returns that they are possible, doable, and realistic, tell us a little bit more about the scope in the areas that you're working on, or what kind of investor can expect, that what is realistic, and what are the numbers that if they see other projects out there, really it's just a sales pitch in order to get them the fund, but they will never get that return, right? Fuquan, hold
Right.
on because I cannot hear you. Okay, go ahead. Go ahead.
Can you hear me?
Yeah, I can hear you now. Go ahead.
Yeah, I said in our market, investors are getting returns anywhere between 8 to 12%. It all
That's
depends.
realistic.
Yeah, it all depends on how much risk they're willing to take, right?
Mm,
So, if they're in some sort of debt fund and getting a passive return, it could be between 8 and 10%. If they have some equity that they're getting some pref plus a piece of the action, it could be, somewhere up to 12%. And those are realistic returns, meaning investors are actually getting
mm,
that.
mhm.
Now, I've seen some projections from some sponsors of guaranteeing 18 to 22%. And
Me too.
investors, yep, they get drunk off yields, investors, and they run for that and they go for that, and then it wind up being, 10%, 9%, which is still a good return on your money, but investors are frustrated at that point because they were promised one thing and they received
And
another.
then you lose the investor forever, right?
Correct. Correct.
Mm,
Yes. So, that's
yeah,
why it's important to really give real expectations, under promise and over deliver, as they say.
yeah, 100%. Uh, and yeah, again, of course, everyone want to maximize the return, but the vehicle itself, you see, if you're gonna to do development, the cost, you have the cost of construction, the cost of material, the architect, the project, the permits, whatever, and also the price. You might get lucky that in the way of the development the price went up. Okay, you can make a little bit more, or rent increases. Yeah. Uh, Now, second question is regarding, and I'm telling you from my point of view as property investor, I'm a big fan of cash flow properties. I'm a big fan of properties that generate good cash flow after you pay the mortgage, or so basically you invest um, not too much money, yeah, and then you got cash flow, and if the property goes up and down, for me is irrelevant because it's giving me very good cash flow. I think we need money every month, right, to buy food, to put petrol to our cars. So if you have 10, 15, 20 properties, they're giving you 2,000, 3,000, $4,000 a month per property. Now you have the cash flow. This actually can replace your job, regardless if it is go up on price or not. Other investors, they are they are not like me. They prefer, okay, I want to invest in places that my capital grow faster. So let me buy property that close to the new development or new infrastructure. So I know that this is going happening here, so I'm gonna buy here, and then after this thing is finished, my property is gonna go up, and I'm gonna will be able to cash out or refinance or whatever. Or there is a mix of both, which is cash flow and capital growth combined.
Yeah.
So, what type of investor you like to work with, and or what solutions do you have for these different type of investor? Because you're gonna have cash flow people like me, you're gonna have capital growth people like other people that I know. Then you're gonna have a lot of people also in the middle that they want a little bit of both. So how you accommodate your projects, or in the on your pool of investors, what they're more likely to invest of all these options.
Yeah, what I usually see, it depends on first their investment goals and really where they
Mm-hmm.
are where they are in their journey. So I see much younger people who's in their early 30s, looking for equity, all the way up to probably somewhere early 50s, and then it transitioned to income, right? So they first you're looking for growth where they can make those
Mm-hmm.
high returns or have a
Mm-hmm.
equity. And then as they get older, they're looking for things that can bring in those monthly payments. So they go from growth to income. And then there's some people that know how to diversify the portfolio to have a little bit of both, right? So
Mm-hmm.
they get closer to retirement. I see more of my investors are looking more for income
Mm-hmm.
versus they don't want to play the growth game anymore. They want to just make sure they got income to cover those expenses. They're retiring, they're cashing out their
They
401k.
want to travel, they want to go on holiday, right?
Yep. So they're just looking for steady income checks that's coming in. So you have all types of vehicles. We're at NNG Capital Fund. What we do is we have a debt fund for those investors to get those regular monthly coupon payments. So it all just depends on where they are in their
Tell
investment
us
journey.
about this fund a little bit more, how it works.
Yeah, so NNG Capital Fund, we have a mezzanine debt fund, which is an opportunity for investors to invest alongside of us in projects that we have, whether it's a multifamily project or it's a ground up construction project. They get monthly distributions, and also they get
That's very good.
yeah, it's a 3-year term. So again, what we do is we have three different classes in the fund. Investors can make 13%, 12%, or 10%, but the structure is a 6% pref, meaning they're going to get for the first 3 years 6% annually, monthly payments, and at the end of the term they get their kicker to make it the 13, 12, or 10%. So they got 6% annually at the end of the 3 years, they'll get the accumulation of the 7% that they were supposed to get each year. It's like a coupon payment. So, but it's deferred until the end. That way, that give us capital cheaper to be able to use, put into action, where it's not a chokehold against us with a bunch of high debt. And then at the end, the investor get rewarded. So maybe we will refinance something or we'll sell off the asset to cash the investor out. But one of the things that we do early on is we kind of get to know the investor to understand what their goals are because our investment vehicle may not be in alignment with
Mm-hmm.
what their goals are.
Mm-hmm.
So, and we also like to make sure that the investors are not just drunk off yields, how much they can make. We want to make sure that they are looking to make an impact with their dollars also because we
Mm-hmm.
invest in a lot of low income areas,
Hundred
affordable,
percent.
we want to make sure that it's purposeful capitalism, if you will.
And
They
there's a
make
lot of impact investors. I came
correct.
across those ones in United Kingdom a lot. Yeah. So investors that they actually they just want to put the dollars or the pound in projects that actually benefit the community. And so we're going into the areas of social responsibility, right? They want to invest in projects that not only can give the money, they're even more inclined to what is the impact and what is going to be the social responsibility or how good it's doing for the community. So tell us a little bit more about these new type of investors that I'm calling impact investors, that they love projects like you describing, like you see if you're developing for low income families and affordable homes and everything. Maybe a new spectrum of investors are coming that they're more they want to know first what will be the impact in the community, and after the second they want to see about the returns and what will be the the return that they're gonna get. And of course, we have to fulfill with them, because this is what is important. So, how do you see social responsibility in real estate, where we have so much challenges? I mean, as you know, property prices always finally ending up going up, divide that they can have cycles, yeah, and and more properties are getting more expensive to build, more expensive to, and they have the market price, and then you have on the other side the low income that they cannot even afford to buy a house. They cannot even afford the rent. Sometimes they need support from the government, and then you guys have to develop place for them to live, and budget is tight, right? Because there is not so much fun available for this type of project, like for a luxury um, development in Miami. Now they're building here in Miami. In Miami, um, the Mercedes-Benz Towers and the Dolce and Gabbana, and we're talking about luxury project that they are amazing, right? And compare with the type of development that you're doing that in that area, with this helping out solving a social problem, which is accommodation, because we all need decent place to live. So how you see the scope, the returns, the business opportunity, how profit and social responsibility um, goes together? Do the old investors need more education as well, and trying to rather than get a GL a hunger, like you said, is look more about the impact that the dollars are doing, and to see how many people they can help with investment. So how do you see the landscape? Because this is movements that more and more are growing. Yeah, I'm aware of it. I do a lot of work with them. So, how tell us a little bit more how you see the scenario, the private investor versus social responsibility investors, and if you see any growth or any or more interested in social responsibility or impact investor rather than before.
Yeah, so I want to back up by saying that when you have a project and you're looking to raise capital, first you have to choose who's your avatar, right? So if you want to attract those type of investors that are impact investors, all of your marketing, all of the places where you're going should be a room full of these people, right? You don't want to spend time trying to convince people who are um, just after the yield. You're not trying to get them to fit into what you have. And this is why I say when we speak to investors, we ask questions to make sure that they're in alignment. We're just not going to take their money just because they have money to invest. We want to make sure they're educated and understand what we're investing in, what's the risk, the impact is going to make. And you have some investors that they want higher yields and they don't really care about the impact. And that's not in alignment with our core values. You always want to do business with people who have the same core values and alignment. So that's kind of how we attract those investors, because people want to invest in things, like I said, that aligns with their core values. So once you begin to educate them about what you do, eventually they'll be attracted to that. And when they understand the investment from the education, more than likely, if you can prove that you have a successful track record, they will invest with you.
Follow us for more interviews with world's most influential, audacious entrepreneurs that overcame challenges and adversity, providing you with the blueprint of how they sold their first million so you can grow your business exponentially.